Hello everyone. Today I am going to provide you with an overview of MCX FNO crude oil technical outlook for the period 14th of November to 18th of November from Flip Capital India. And prior to go and see the outlook for the coming week, let's first review the view which we have shared last week and how things have panned out. So a week before, as on 21st of October to 11th of November, for this period, we have mentioned that natural gas, which is trading at 410 levels, has a crucial tug of war zone at around 400 mark, holding above which one can expect a pullback towards the major resistance, of, you can say a kind of trend reversal resistance at around 550 odd levels, which can be looked for fresh trading shorts. And once it sustains below its crucial support of 400 mark, it could slip down to the next support level of 300 and 275. So overall net for short to mid-term time frame, it was 400 mark, which was a kind of silver line between bulls and bears, and holding over which one was expecting some kind of pullback initially. So as per our write-up, also we can see that what we have mentioned in last 2 to 3 weeks, that 400 will act as a tug of war between bulls and bears. And since the counter is trading in oversold, a pullback from lows towards the highs of 485, 520 cannot be ruled out. But overall, any pullback should be looked for selling. If you see the last 3 weeks, natural gas has not breached below 400 mark, and a decent pullback has been witnessed. In fact, last week, natural gas made a high of 591 before slipping down back to 467 levels, and it finally ended last week at 476 levels, down almost 8% compared to the previous week. So as we can see here on the charts, initially it gave a breakdown below 500, 525 odd levels. It tested the support of 425, then up, bounce back and pull back in order to retest the earlier support, now turned resistance, has been witnessed, which ideally got sold off in line with the expectations. So overall for the coming week now, we believe that 400 followed by 360 odd levels can be looked as again a major support. There are contra trading longs can be looked with strict stop losses, while on the higher end 560 followed by 600 remains major hurdle for next few weeks. One can expect a broad trading zone for natural gas, which is a high beta counter between 400 and 600 for next few weeks, which can be looked for buy on dips and sell on rise. So overall, we are expecting that natural gas will remain under pressure, trading below 600 mark. It will be open towards the lows of 400 and even 360, which can be looked for trading long, keeping strict stop losses. Now, if we see a few strategies which we have initiated in recent last weeks, as per the technical price studies, then the first one is of gold. As in 2nd of November, gold future was trading at around 50,750 odd levels, and we have initiated a kind of bull spread where we have bought 50,000 call and sold 51,000 call for the expiry 24th of November in the ratio 1:1. And this strategy has given a break even at around 50,560 odd levels. That means as on 24th of November, if gold is trading over and above 50,560 odd levels, there is no risk. As per the payoff diagram, here we can see that the maximum risk was at around 50,000 mark and lower, trading below which this strategy would have incurred a loss of 56,000 per lot. At around 50,560, as mentioned, it's a break even, and the best case return was over and above 51,000 levels, where we could have fetched 44,000 per lot gains. So as on 9th of November, this strategy was giving a profit of 23,000 mark, where we have recommended our clients to take partial profit. And last week, as on 11th of November, this strategy was giving a profit of around 38,000 per lot. Another strategy which was initiated on 2nd of November was of natural gas, which was trading at 493. And there we have recommended a kind of pullback strategy where we have bought 480 call and sold 600 call in the ratio 1:2 for the expiry 23rd of November. So this strategy was in the ratio 1:2, where the break even, or in fact we have given a stop loss of 660 odd levels, that in case if it sustains over and above this level, then we would have to exit the position because we were short 2 lots against long 1 lot. So as on 7th of November, this strategy was giving a profit of 16,750 per lot, while last week it ended at minus 5750 odd levels. And as we can see here on the payoff diagram, that the maximum loss of the strategy is below 480 odd levels, where a loss of 30,750 is there, while on the flip side the maximum gain is at around 600 odd levels. That means in case if natural gas sustains and closes around 600 mark as on 23rd of November, this strategy would have fetched a profit of 1,19,250 odd. So currently we are holding the position open, and the status is PL minus 5750 against PL 16,750 as on 7th of November. On the same day, 2nd of November, we also initiated our strategy in crude oil, that too in the ratio 1:2 for 16th of November expiry, where we have bought 7,200 call and we have sold 8,000 call. In the ratio 1:2, the maximum profit in this strategy is at around 800 odd levels. In case if the expiry was around 800 mark, this 8,000 levels, this strategy would have fetched a profit of around 35,600 mark, with a break even at 7,380 and the maximum loss of 17,000 at around 7,200 and lower levels. This strategy has given a profit of around 9,700 rupees as on 7th of November. But as we have seen that crude oil once again slipped down from the highs of 7,600 to end last week at around 71 odd levels, 100 levels. So this strategy has turned negative from the profit of 9,700 plus to minus 8,300 last week. We are still holding the position open. Likewise, there are a few other strategies like gold, which we have initiated on 17th of October, which was booked on 11th of November at a gain of around 1,05,200. And crude oil, as on 17th of November, where initially this strategy was giving a profit of 40,000, and now because crude oil has slipped down once again, this strategy is in loss, giving a return of minus 28,400. So these are the few strategies which we have initiated and recommended based on the technicals and the price swings of these selective counters. So thank you for your precious time. If you find our content relevant, then kindly get in touch with us for your queries on this given mail ID and contact details. And it will be a pleasure to share our technical outlook, strategies, and the reports in the coming weeks with you. Thank you very much.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.